Don't try to get rich in a week. It's not gonna happen. You're gonna just take too much risk. Make sure your cost is under control and make sure you understand what's happening to your money. So build diversified exposure to a variety of asset classes, which is what everybody should do for their own money.
Michele Ferrario is co-founder and CEO of one of Asia's fastest growing fintechs, StashAway. In this episode, what is money today? It's no longer paper in your pocket, but something more abstract, borderless digital data. We'll explore this fundamental shift and what it means when tech and finance collide. Michele, thank you so much for joining us here today. Now, set us up a little bit. StashAway is a robo-advisor, but for the uninitiated, what exactly does that mean?
So thank you for having me first. And I don't like the word robo-advisors. The reason I don't like the term too much is that, robo-advisor does a little bit of an idea that, there's no people behind it. Well, there is a lot of people. StashAway, there is 200 people, for example, and there is a lot of work behind it. There's a lot of faces and there's a lot of thinking behind the robot, how people call it. But yeah, the core thing is helping people build diversified exposure to a variety of asset classes, which is what everybody should do for their own money.
Alrighty, so let's delve into that a little bit more. One of the most famous investors in the world, Warren Buffett, was very well known for recommending that people should at very least be investing in ETFs, so the exchange-traded funds. It sounds pretty simple, but that wasn't the case, right? Especially when you first entered into this area. Tell me a little bit more.
Yeah, no, that's correct. And I agree with Warren Buffett that, ETFs are a fantastic instruments to get diversified exposure to a specific asset class at a very low cost. And so I went to my two banks and without naming them, I wasn't happy because they were only trying to pitch me products that made money for the bank, and ETFs were completely out of the equation because the banks don't make money selling ETFs. And that's when I thought, maybe there is a way to improve this. Maybe there is a way to build something that enables people to do the right thing at a low cost. And that's where the idea that then became StashAway was born.
So then, anyone who's looking at investing in ETFs, what sort of base knowledge do you need to have the confidence to be able to say, okay, yes, I know what I'm putting my money in?
Look, there is now a lot of ETFs. ETFs have been extremely successful. In the US, the great majority of funds are now being invested through ETFs. And as in every good thing, there is now variations on good things. So there is many ETFs. So for example, if you want to invest in the S&P 500, so you want to invest in what people call the large cap US equity, so the largest companies traded in the United States, the S&P 500 is going to be your index of reference with 500 companies.
About 78% of ETF assets under management are currently in the United States, which makes the US the largest ETF market globally. But the Asia-Pacific region is growing rapidly, now accounting for about 12% of global ETF assets. And while the Middle East's direct share of global ETF assets remains below 1%, it's one of the fastest growing regional ETF markets. What are some of the emerging fintech trends, do you think, that are coming up that will influence how the future generations are going to be investing their money?
The first one is actually been happening for a long time, and it's using ETFs as building blocks. I want to talk about is not something new either, which is artificial intelligence. Obviously, everybody's talking about it, but the reality is that this will have an impact also on how we manage our money, or how we, at least how we look for information about our money. And so, obviously, that's a big trend. We are investing a lot of time and effort in thinking about how can we use those new technologies to help our clients without falling into the gimmicky, potential implementation. It's very easy to do gimmicky implementation. What is not easy is to build something meaningful that enables you to really understand your money better, to make better decisions, to have better behaviors that makes you wealthier over time just because you made smarter choices throughout the way. And I think AI, artificial intelligence, has the potential to really help everyone.
I think that's great insight. Now, I think one of the other things I'd like to get is your vision then for financial inclusion. How important is it and especially for fintech's impact and the demographic groups as well. How do you think that that's all going to come into play, especially which demographic groups you reckon remain underserved globally as well? I'd love to get your thoughts on that.
My perspective, when we started the company, I thought that our target market was people, anyone that has less than $2 million in financial wealth. And the reason is that those people are served by what the banks call kind of like the premium banks, which tend to be extremely expensive and not very sophisticated in their offering. And so I thought there is a way to make it simple and cost-effective to invest intelligently for this group of people, which is a very significant group. What I realized over time is actually that that bar is probably higher than I thought. It's probably up to $10 million. So even if you have $7, $8, $10 million, you actually are not properly served. You're served very expensively, and you're pitched products that might not be the right ones for you just because they have large fees for the bank. And so to me, I know this might sound odd, but actually people up to $10 million are actually currently underserved. And this is true across the regions I know well. Maybe less true in the US, maybe less true in a few other countries, but in the countries I know, the Southeast Asia, Middle East, definitely absolutely true, and it's a large part of the population.
Michele, you've given us some great nuggets, but if there was one thing that you would like people to take away from this conversation today, what is it?
Diversify. Don't try to get rich in a week. It's not going to happen. You're going to just take too much risk. So diversify, make sure your cost is under control, and make sure you understand what's happening to your money so you are in control yourself. Don't just give it to someone else that you might not see coming back.
Michele Ferrario, thank you so much. A big thank you to our special guest, Michele Ferrario, co-founder and CEO of Fintech StashAway. You've been watching I See Your Trade, brought to you by IC Markets, a leading high-performance trading provider. Trade up to IC Markets. See you next time.